Ethereum now and for the first time ever is on pace to hit $1 trillion in network transaction volume this year in 2020. Hey guys, Maddie here with Altcoin Buzz, TGIF, and happy Friday. Hope you're having a terrific day. We'll be discussing not only that big Ethereum news and that milestone figure of $1 trillion, we're also taking a look at how gold and cryptocurrency are correlated. No surprise there. This one analyst from Kitco is suggesting that that signal and the direction that both of these markets are moving in suggests a strong lack of confidence in the US dollar, perhaps both American monetary and fiscal policy. However, do keep in mind that this is Kitco, so they have a vested interest in presenting you with their point of view because they are, of course, selling you precious metals and financial instruments related to that commodity. However, the gold price right now is pretty much at an all-time high, a 30-year all-time high, just below $2,000 an ounce, and a lot of people expect it to break through that barrier very soon. Altcoin Buzz is talking about Paul Tudor Jones, who is saying that basically Bitcoin is the perfect hedge against some of these monetary and fiscal policies, the quantitative easing that we're seeing right now in the Federal Reserve. And even at $13,000, he suggests that it is a fantastic diversification option against inflation. Barry Silbert, who is the CEO of Grayscale, is also discussing how he just added $300 million in assets under management in just one day. Grayscale's total assets under management now at $7.3 billion. The majority of that is represented by Bitcoin and Ethereum. So that is major news, very good news. In fact, Grayscale is one of many companies. They are perhaps more in the cryptocurrency space, but you also have the Michael Saylors, the MicroStrategies of the world, and other companies, perhaps in the form of pension funds, of insurance companies that represent this so-called wall of money that Frank has been talking about recently. Guys, we'll be discussing all that and more, but let's kick things off with that major Ethereum news here on Cointelegraph.com. This comes to us courtesy of Messari Research, and one analyst in particular will give him his due attention here. But Ethereum set to become the first blockchain to settle $1 trillion, again in transaction volume, in 1 year in 2020. And I've said it for a long time now. I've discussed going back, I think, a couple of years that Ethereum's network represents the real value here. We're not talking about the market cap of Ethereum per se. We're not talking about the price of Ethereum, but I think Ethereum's network could, it looks like very soon, far surpass the total value of Bitcoin, its market cap, its network, whatever you want to call it. And it looks like we're going to see that even by the end of 2020. As per the author of this piece, if the current trend continues, Messari predicts Ethereum will become the first public blockchain to settle $1 trillion in transfers over a calendar year. Here's the visual that was put up specifically. So as you can see, 2018 was a pretty good year for Bitcoin and Ethereum. Bitcoin far outpacing Ethereum in terms of the value transacted on its network. But then 2019 was that extended bear market. We saw a slump, and now largely on the shoulders of not only DeFi, which has been really the main story of 2020, but DeFi as well as stable coins and their representation in the form of smart contracts. You've had a lot of renewed momentum, especially for Ethereum. And as you can see, the LTM figure for Ethereum is $11 billion short of $1 trillion, LTM standing for last 12 months. And if you extrapolate and you move ahead, it does look like Ethereum will outpace not only Bitcoin, but will achieve $1 trillion in transacted volume in terms of what its network processes in 2020. Messari's Ryan Watkins attributes, as I mentioned, much of Ethereum's volume spike to increased ERC20 stablecoin volumes, with the majority of Tether transactions now taking place on Ethereum, and yield farming driven demand pushing supply growth of more than 600% for MakerDAO's DAI stablecoin. However, and as always, it is a shifting landscape, and Messari predicts, quote, the next 12 months could come to define the platform wars in cryptocurrency, noting Ethereum's ongoing high fees as a problem that rival blockchains will seek to solve, alongside, quote, the rise of parallel DeFi ecosystems. Look for all would-be ETH killers to continue to empty out their treasuries to build a parallel DeFi sector throughout the end of 2020 and beyond. Guys, not a problem, at least in my opinion. Competition and a competitive landscape bolsters more options. It bolsters better services, better products, and better quality overall. So bring it on. That's my point of view. Here we have Ryan Watkins himself. Make sure you're following, courtesy of Messari here. Ethereum now transacts 2 times more value than Bitcoin daily. This is what a cryptocurrency looks like when it starts to find product market fit. Okay, and here's a very telling statistic that speaks to the success of Ethereum's network. The second leading reason is Ethereum's boom in on-chain liquidity. Uniswap and Curve did more than $20 billion in combined volume for September, but DEXs now comprise a full 13.6% of total volumes from all exchanges, and that's both centralized and decentralized. So decentralized exchanges account for 13.6% of all exchanges, of all stripes. Now, at the time of press, the 24-hour trading volume of Ethereum was set to be $7 billion. It is now up $12.2 billion with a market cap of $47 billion. There is an argument to be made, and some are suggesting that not only Ethereum's network, but Ethereum itself, its market cap could reach $1 trillion before that of Bitcoin's. For reference, Bitcoin right now is somewhere in the neighborhood of about $240 billion in terms of total market cap. So it's a good 5 times ahead of Ethereum. But look, if you extrapolate and you look ahead, this is not a linear world that we live in. We have to think parabolically, we have to think exponentially. And as some would say, I know there are many Ethereum devotees out there in the Altcoin Buzz army, for example. Many are behind the idea that Ethereum could overtake Bitcoin in the #1 position in terms of total market cap. Again, right now it has a long way to go. It's about 1/5 of the way there. But if its network continues to outperform and continues to grow, it is certainly possible. Let me know your thoughts about that, guys, in the comments below. Let's now exist gold and cryptocurrency and the correlation that exists between the two asset classes. This courtesy of Kitco. Take it with a grain of salt because Kitco, of course, is in the business of precious metals. They're looking to sell you both products and services. Nevertheless, what they're focusing on here is mostly the fact that we're seeing waning support in terms of Americans' confidence in the US dollar, in the monetary system, and some of the fiscal policies that are being enacted. This comes really as, I'd say, a perfect storm between a lot of different factors. We're seeing, #1, a lot of uncertainty right now, just financially, and in terms of what's happening with the pandemic. You have a stimulus bill that is still being discussed, is still being negotiated. That's #1. That, of course, is related to all the quantitative easing right now that's being proposed by the Federal Reserve. You have a lot of tensions in the US, unfortunately, I'm sorry to report, racial tensions and other tensions, and you have an upcoming election that is arguably crazier than ever. So you have all these things kind of combining right now, really to create a perfect storm, and some would argue a climate of crisis. And ultimately, that's what this individual, Hubert Moolman, is arguing, that gold, silver, and cryptocurrencies provide that crisis value by being that bet against the system that fewer and fewer people seem to have confidence in. We're not talking about the US stock market or the economy, but specifically the US dollar. Gold has been performing pretty well as of late. You can see it's down a little bit now, but we are effectively at a 30-year all-time high, just below $2,000 an ounce right now, fluttering just below $1,900. As you can see, I expect us to reach an all-time high for gold very soon indeed, and we can very likely assume to blast above $2,000. I'm not a gold analyst or anything as far as a TA chart analyst or anything like that. However, I think, again, based on those variables that I described a moment ago, I think we could very well see gold well north of $2,000 an ounce. Here's the interesting thing, and I always kind of suggest that, hey, diversification isn't a bad thing, and I would not advise against having part of your portfolio, part of assets in the form of precious metals. I don't think it's the worst idea in the world, but it's nice to have these kinds of bedfellows. These, even though we suggest that Bitcoin is, for example, a superior version of gold, we have quite a lot of the same mentality and the same philosophy here. And Moolman in this article is definitely on our side. He's suggesting that Bitcoin is likely to see a move towards $100,000 at least in the coming years. Similarly, the outlook for silver, he suggests, is really the same. It's going to continue on its parabolic path. Again, take that with a grain of salt. This is a firm, this is a company that has a vested interest in selling you on their ideology and on their products ultimately. But again, not the worst bedfellows to have, those that are in the precious metal space. And the really nice thing about this climate that we're in is that whether it's the precious metal people or the billionaire investors, everybody seems to be in our corner lately. At Altcoin Buzz IO tweeting about Paul Tudor Jones, who said Bitcoin is like investing with Steve Jobs and Apple. So he talked about this with Business Insider. Billionaire investor Paul Tudor Jones calls Bitcoin the best inflation trade as the token surges above $13,000.
Well, Bitcoin, remember, the reason that I liked Bitcoin and wrote about it to my investors was because back in March and April, it became really apparent, given the monetary policy that was being pursued by the Fed, the incredible quantitative easing that they were doing and other central banks were doing, that we were in an unprecedented time, and that given the fact that we were going to try to monetize many of the negative issues that COVID brought, that one had to begin to think about how you defend yourself against inflation, with M2 now growing at a 25% annual rate. So, which we haven't seen in 80 years, by the way.
Now, Jones admittedly is an outsider when it comes to cryptocurrency, but that's okay. He's still very successful in his own right, very, very successful, and he's an intelligent man, and he can be that kind of gateway drug for other investors that may not have dipped their toes in the waters of Bitcoin and cryptocurrency just yet. He said the rally to $13,000 is nothing, saying we're just in the, quote, first inning of the baseball game, so to speak. If you're unfamiliar with the sport, baseball has a full 9 innings. So we've only just really gotten started. The Federal Reserve's updated policy framework will allow for brief overshoots of its 2% inflation target to offset the slowed pace of price growth, meaning we're looking at 2% or more inflation. This according to Jones, and he said the new strategy has investors looking for new inflation hedges, justifiably and understandably so, as the economy recovers. And Jones views Bitcoin, the cryptocurrency, as the strongest bet. Quote, I came to the conclusion that Bitcoin was going to be the best inflation trade. And that's great to see. We have another strong voice in our corner. This, of course, coming on the heels of PayPal's announcement that they're going to support Bitcoin and cryptocurrency in the form of Ethereum, Bitcoin Cash, and Litecoin as well. They also had that announcement that they'll be acquiring BitGo. You can check out our last video for more information about that development. Square also made a major $50 million investment in Bitcoin earlier in the month. And then you have some major, and I'm talking major heavyweights such as Fidelity. They rolled out their first Bitcoin-focused fund in August. I expect to be able to cover more news out of Fidelity soon, but that's the latest right now, that development back from August. And I think a lot of people are starting to see the writing on the wall, because you take a look at Bitcoin, for all the FUD that it still receives, although that's starting to shift, but for all the FUD it still receives, it's still a wildly well-performing asset, up 78% this year alone. And yes, I know we're down from the highs, the all-time high of December 2017, just below 20K, but think about that. How many other assets can you really compare Bitcoin to, whether you're talking about commodities, whether you're talking about stocks or indices, that are up 78% in terms of their year-to-date performance? Not too bad when you step back and consider that. All right, so take all of those positive and exciting ingredients that I just discussed and add now a pinch of Barry Silbert, who of course is the founder and CEO of Grayscale, with the following. He added a cool $300 million in AUM, assets under management, in just one day. Now we are really cooking up a Bitcoin hype stew bowl. So he's quoting this Grayscale quote here from the 22nd of October. Update: net assets under management, holdings per share, and market price per share for our investment products. Total assets under management now at $7.3 billion. Can you guys imagine adding $300 million AUM in just one day, mostly in the form, by the way, of Bitcoin and Ethereum? Cointelegraph here covering that news. Grayscale adds a cool $300 million in just one day, and $1 billion, $1 billion with a B, just this week. So this is according to Grayscale's Twitter account and their CEO. Like I mentioned, they're now at $7.3 billion in assets under management. That is a $1 billion increase from just the 15th of October, when they were at $6.3 billion in assets under management. Also keep in mind that the funds are mostly held in Grayscale's trusts for Bitcoin and Ethereum, along with the firm's digital large cap fund.